So question 22 is this question here. So I will read the question. The question says that you are provided with the following extracts of the statement of profit or loss and the statement of financial position for Darubini Limited for the year ended 30th June 2020, 2021, and we have all the way to 2022. Fine. Then they are saying, they have given us the financial statement now for the 3 years. That is from 2020 all the way to 2022 for profit and loss account, which you can be able to see there. Then also we have the statement of financial position. We have been given for the 3 years. Fine. Then down there, they are saying, prepare the statement of cash flows for the company for the 2 years ended 30th June 2021 and June 2022. So they are requesting for 2021 and 2022. So 2020 has not been requested for. They want for the 2 years, 2021, 2022. So let's concentrate first with A. Actually, for B and C, we'll try to maneuver. They are more or less on financial management. But let's start with part A, which is the statement of cash flows. So in this case, we have agreed that we do hybrid. We try the theory part and the Excel part. But I will mostly, 99%, I will try to go the Excel way. But remember, you people have been trained on the Excel, so you will cope up with, mine is very simple. Then you do the advanced part. So when we go to the Excel, so you will open an Excel sheet. You will open a worksheet. So in the worksheet, you will write the name of the company on the back top left. So on the top left, you write the name of the company. So here we have, and here now I assume you have the format. We sent the format sometimes last week but one. So that is Darubini Limited. Statement of cash flows. Statement of cash flows for the year ended. The year is ending in June, 30th June. So you say 30th June. June you can write whichever way. June. Then because there are 2 years, I'm indicating there dot for the 2 years. So here we have 2021, the one for 2021 and 2022. So you'll have 2021, you will have 2022, and all are in Kenya shillings, not Kenya shillings per se, but they are in shillings. So you also have them there in shillings. So shillings are in thousands. So you will have these in shillings, which are in thousands there. So you can have it up to somewhere there, no big issue, or even up to where the dot ends, somewhere there. Then sometimes, though not always, it's good to separate these two. So I can insert another column there. Then I bring it back almost near, but somewhere there for the separation.
Walimu.
You can't see the screen?
No.
Oh, Sorry, then let me share this. Sorry for that. It's good you have raised before we move. You are still seeing the question, so let me share the screen. Sorry for that. So let me share my screen. There's my Excel sheet. So I was I just written the heading, which is the name of the company. So are you able to see this?
Yes, yes.
Okay, thank you. Then at least the name of the company, the heading, you can have it bold. So now you will have from there, after that arrangement, they want for the 2 years. After that arrangement, you now obey. You obey the format. Of course, the indirect, which when I sent you the format, I told you to use the indirect format. So the format of cash flow has 3 activities, in which case you start with operating activities. So you start with operating activities. So the operating activities you can underline, or you can just have it bold. Either you bold it up or you underline, no problem. So I want to engage the class. So under operating activities in cash flow, we start with what starts below the operating activities? Somebody? What do we start with? We start with which profit? Profit before or after tax? From our format. Yeah, I can see Karar, Bilha. We start with profit before taxation. That is correct. So once you write the operating activities, you start with the profit, and kindly try to write in full profit before tax. So you give us the profit before tax. So I hope if each and every one of us has the pilot. I don't want now to get out of the Excel sheet. You have the pilot, the question, the pilot paper. This is the pilot question 22. So can you check the profit before tax? I want to confirm whether you have the paper. Can you tell me the profit before tax for 2021, 2022? 2021, 2022. Those who are capable of seeing. What is our profit there? Or you can just give me one. It's just a way of me engaging the class. From that question, so Bilha, 14,475 and 17 ED, 17,756, correct. Those are the profit before tax. So I will capture here 14,475. Then the other side, we have 17,756. Then in these cells here, I can highlight them so that we have, in accounting, at least you should have points like that. Then once you write profit before tax, there are some expenses, and listen to this, which are normally subtracted, expenses which are subtracted before profit before tax, but they are not operating expenses. We only have 3 operating expenses. Operating expenses are the expenses which you incur. You incur on daily basis, or you incur to operate. There are 3. Cost of sales. I hope you are taking notes. Cost of sales, administrative, selling and distribution. Those 3 are the operating expenses which are there. Any other expense, and listen to that, because now they will not be specific. Any other expense apart from those 3 in any cash flow, you add back. You add them back because they were subtracted prior to PBT. PBT is the profit before tax, but in reality, they are not operating expenses. So you add them back to the profit. So once you write PBT, and that one should be a free tick to every one of us, you come and say adjust for. So adjust for in any cash flow in this world. Once you write adjust for, always write depreciation. Always write depreciation. So depreciation, check. Can you check depreciation in our question? Oh. So I want you to check depreciation. So depreciation for every year, as you can see, 2021, good. I can see full participation. There is 800 and 750. So we add 800. We bring here 750. Then go to the question where we have profit before tax. Then go backwards. Check for me any expense which is not an operating expense. I've told you the operating expenses. So any expense which was incurred before profit before tax, which is not part of operations. Can you identify any within that space before PBT in the question? Just tell me by name. Which expense? I can be able to see one. Which one is this? Which you can be able to identify? Somebody? Someone, which is this expense you are seeing before PBT, which is not an operating expense? Someone who is capable? Bilha is saying none. No, there is one. Bilha, there is one. There is one. If you check P&L, yeah, Eliza, finance costs. There is finance cost there. Interest is not, finance cost is the category of interest. Finance cost is not an operating expense. We don't incur that on daily operations. The only expenses you allow there is cost of sales, admin, distribution. So in this question, distribution and admin, they call it operating expenses. So any other expense you are seeing prior to PBT, you add them back. So thank you for finance cost to come there. So you write here finance cost. So we have finance cost. So finance cost, also you add back. You add back 7,000. And why are we adding back? They were subtracted, but they are not operating expenses. So we have finance cost. When you check up keenly, there is none. So Bila, that is where now your none is coming up. There is none. So there being none, you add. Now you add. So addition, you add from the profit before tax. So you just say is equals to whichever way you always do it. So you can take it from there all the way to, all these ones are quite small, but fine. All the way to that stage. Then we can have that. The other side. So the other side, we have that. So I can, to show that it is the total, I can bottom line that one. Also this one here, just to indicate that that is the total. So the name you give that total always is not very, very, very much important when it comes to examination. But we can just indicate for the for whoever is checking. So it is normally called cash flow before what happens? Before working capital. Before working capital changes. Before working capital changes. So this one means I will have to push up this one like that. So that is the cash flow before working capital changes. Now that one means we shall now have to bring the working capital. So working capital, kindly listen to this. Working capital, now I can underline this for separation purposes. And also, you've noticed everything is bold. So the ones like depreciation, finance cost, those ones we can unbold. Even the profit before taxation, there is no need of bold. Bold should only apply to the headings. Please, let's mute ourselves. Or I'll be forced to mute everyone because I wanted us to participate through talking or otherwise. So let's mute. So when you go to working capital are those daily, what you generate daily, what you pay daily. Mostly, there are these three: inventory, receivables, and payables. Those three. So when you are talking of working capital, those are what we are talking about. Working capital are these three: the inventory, receivable, and payables. And what are you checking? You are checking increase or decrease. Increase or decrease. That is what you're supposed to check. So you just check what was the inventory at the start, what is inventory at the end. Like that. It's just a matter of comparison. So from the looks, let's check, for example, inventory without working it out. You'll realize inventory, 2020 it was 15, 2021 it went to 21, an increase. From 21 to 27, increase. Receivable the same, 45 to 8, increase, 8 to 15, increase. Payables, where is payables? Payables down there under current liabilities. Check current liabilities. Payables was 3, it went to 6, it went to 7. So all the working capital elements, they were increased. So you'll come here and tell me increase. You'll come here and tell me increase in inventory. So increase in inventory. So I will just press E. All of them are increased. Then this one here, I now just change this one to receivables. I will change this one to payables. This one here, I'll change it to payables. Then now, you don't do those things that you insert. You cannot just do them manually, then you insert. That is not allowed when you are working on data analytics. You have to show us where everything is coming from. Remember the ones we have been working on, we have been picking them direct. There was no any working required. But now this one increase, it means you are comparing with something. So that comparison, you must show us that working. So when it comes to that working, now I will open another worksheet 2. And I will call it working 1. I'll call it working 1. So working 1, the arrangement might not be regularized. Nobody will dictate how you will do your workings, but it's good to do them separately from the presentation. So I can call it changes. I can call it changes in working capital. In working capital, like that. So changes in working capital, control bold, control underline. So working capital, how will you know the change? You will compare closing with the opening. So you can start with any opening or closing. So let me start with opening. So just say opening, you say closing, then you say we have realized all of them were increased. So I'll just say increase. If there is one which was, there was an increase, there was a decrease, then I say increase stroke decrease there. Then now I will bring here inventory. I'll bring inventory. Then inventory is quite excuse me, inventory, whichever. Why is my computer misbehaving? Inventory, then receivables, then I will have payables. So I will have here payables. Then, so let's go back to the paper. We bring all the openings. I don't need this one here, I can delete it out. So we go to the paper, we go to the question. Inventory under current assets. Under current assets, inventory, you can see there opening in 20. So now maybe I need to say something here. Let me start with the 2021. Yeah. So let me bring this, just a moment, I insert this one here. I start with 2021, very important. So opening for 2021, opening inventory, you take 2020. 2020 is the opening for 2021. So you will come here and take 15,000 opening inventory. Then closing is now the one in 2021, which is 21,750. So it increased from 15 to 21,750. So you say is equals to this minus that. Then receivables, I hope you are following the paper, was 45,8750. Then now we are getting this. I could have just, there is no need of me doing that all the time. Payables, where are you? I hope you can see accounts payable. 3750, we have 6658. Then now I can drag this because I had a command formula there. So we have that. Then also 2021. So I bring here 2021. I'm bringing here now 2022, sorry. Then I'm having the same items again in 2022. So the same items, you paste there. So still opening. So opening 2022 is the closing for 2021. So begin 2021, 21,750. Closing 27. Please, ukipotea unaniambia 27,488. Receivables opening for 2022 is the closing 2021, which was 8750, which was 15,460. Payables, 6658. Then 2022, 7989. There. Then I can still work with my formula, which was above there, to have that. Then I delete this one. I don't need it. Don't need this one. Yeah. But now you will have to be very keen for some two. There are two which we have to do an amendment. There are two which we need to do an amendment. So the amendment is this one here. You know, now you have done everything, it's okay. Payables, when payable, you know, when inventory and receivables increases, it means your money is outside. Increase in stock, you know, this is cash flow. Increase in stock, which is inventory, means you are buying more stock. So when you are buying more stock, cash is going out. So it's a negative cash flow. So that negative is okay. Increase in receivables means that you are selling on credit you are not collecting. So your money is outside with the customers. But payables, when payables goes up, increase in payables means you are not paying. Haulipi deni. Uko na pesa lakini haulipi. So that one should be a positive figure. So this one will be subjected to change. It will go the other way around. So for payables, you will allow me to do the reverse. It should be a positive figure, like that. So we were doing this. Hey, allow me to save this thing. The power can go off, then we be messed up. Sorry. So let me just save it so that in case of anything, we are safe. Let me save it. Sure, thank you. So I was just saving it in case of anything. So we have done the workings which we required for this space here, for this space here. Now, that is now where you need to interlink. You interlink any working you do, you must interlink them. So remember the three: the inventory, the receivables, and the payables. You need to link them with that working, and all of them are in relation to working one. So all of them, you have to tell us working one. So that is working one. That is also working one, like that. So those two workings needs to be bold. You need to be very neat in presentation so that examiner can think you are very, you know what is happening, even if things are very dangerous, like that. So now that is where your Mwalimu is not here for interlinking, but there's a way I always do it. I know maybe, not maybe, I know you are taught the other way. So I will just want you stick to your way of interlinking, or maybe you are taught my way. I don't know how you are taught, but most likely you are not taught. But this is how I do linking. So I will come to this space here for the increase in inventory. I just press the equal sign. Then I go to what I want to link. So I want inventory, the first increase, this one here. I click that. Then again, I say equal sign. Then I go back. Then when I go back, I delete that one, that second equal sign. Then I press that one there. So once I press it, it comes. Then I drag it down. It will bring all those other figures. If you check those figures, they should be the same: 6750, 4250, and 29. They are the ones we have this other side. So we have interlinked them. In which case, if we try to alter, okay, Pauline. So Pauline, I'm going to link for 2022. But I was fast because I thought you used the other way, so I did not want you even to capture this one on mine. But Pauline, I can repeat for you. So fine, let me link 2022. So linking 2022, I will come to where I want it to be in the cash flow. I want them to be in the cash flow. So I press equal sign. So Josephine, Pauline, I've reduced the speed in case you're taking notes. So I press the equal sign where I want the figure to come. I want it to come to the cash flow from working. You bring it to presentation from working. So I say is equals to, then I go to my working, which is sheet 2. I press there. Then Now I want these figures. I want these ones here. These three. I want them to go to the other side. So I will come and click the first one, inventory. So I click inventory there. Then once I click it, before I go back, I again click equal sign. Okay, that is how I do it. So again, I click that equal sign. So I'm starting afresh, just in case. So I want to link the working with the presentation. I come here, I press equal sign, then I go to the working. I click what I want to take to the presentation, which is this one here. Then I press equal sign before I go back. Then when I go back, you find sheet 2 D9 is equals to sheet 1. So I delete that one equals to sheet 1 up to the equal sign. There, up to there. Then you just press enter. Press enter. Then it comes there. Then you drag it. You drag this to bring for you the others. So drag this one up to there. So you have the others. So when you check, let me work with the payables. Let me work with the payables. For example, the 1331. If you if you realized in workings, we messed, maybe we messed in something here. Instead of 66.58, we wrote 76. So if you change anything we change here, it takes this one to 331. When you go back, you will also realize this one changes automatically. So once you link, any change on the other side will change this other side. So let me just capture how it was supposed to be. It was 6. So Josephine and Pauline, na majina zenu zimekaribiana. The link. Confirm you have seen how we have linked. Kindly, if you wanted to know that. Are you okay with that? Because I need now to proceed. Pauline understood? Josephine? Correct. So I want to add the cash flow from before working capital changes. That is that one, plus all this. So I'll do my sum there. When you want to sum, you bottom single line. You bottom single line there. Then just a minute. That is okay, so good. Then I will come and say is equals to summation, people do it differently, the functions. So this one here, you can bring it, right? You can bring it up to there, then you close, then enter, then there. So this one, the names after prayers, Ikra, just a minute, we write this, then we go for prayers. Ikra, can 2 minutes can be okay, so that I finish with the operating. We come back for investing. Is 2 minutes okay? Ikran? So that is okay. So this one is called cash generated from operations. Operations. But ukisahau hiyo jina, hiyo isikujalishe. Those names are not very important. Then at this stage, you bring tax paid. Sorry, you bring tax paid. Then you bring interest. Interest here is the finance cost. Finance cost, you will find it even in some people take it down there and under financing, but interest and dividends, you can take them anywhere in cash flow. So there is no problem us bringing it here. But here now you say paid. So we shall bring them there. So let's stop at that stage. We go for prayers, then we come back. So let's pray, then we'll be back. So Ikran, after how many minutes? Ikran, after how many minutes so that we time? I assume Ikran has already left for prayers. That was 5 minutes. So 5 minutes, let's meet at 7:05. Thank you. So we are back. I hope the prayer is over. Yeah, that is over. So I hope everyone is back. So tax paid. Tax paid. So tax paid, when you check this question, keenly, you will realize that there was no tax liability. You know, if there is tax liability, we reconcile. We check what was the liability at the beginning, how much has been charged during the year, then you compare with the closing to know what was paid. But in this question, there was no, if you check current liabilities, there was no outstanding tax obligation. We only had income tax expense in the P&L. So if there is no obligation, then whatever is in the P&L is what was, we assume that is what was paid. And therefore, those are what you come and capture. You come and capture here, capture those taxes and assume they are what was paid because there was no obligation at the beginning. So in 2021, income tax, I'm seeing 4343. Then we have the other side, 5327. The same thing applies to finance cost. You know, finance cost, we added it back to operations because it is not an operating expense. You need to, interest and tax will come later. So finance cost, you bring it down here, but now as a cash outflow. So you bring, it was 7,000. So you assume that is what was paid because there was no accrued interest. But if there was accrued interest, you take opening plus what is in the P&L, then you compare with the closing. But I don't think if your exam will be that complicated with a lot of issues. You don't have time for those things like that. So it will just be something like this one here. So we add this. So single, double, bottom line. No, single top, single bottom. Yes, because I'm done with operations. Operations ends there. So you will add. This is cash flow. This is the cash flow. Cash flow from operating activities. So what you get here, what you get there, is what we have generated from operating activities there. Then call it A. Why am I calling it A? Cash flow is divided into 3. So part A is the first activity there. So we are done with phase 1. We are going to investing activities. So investing, or is there someone with a question? Any concern from any one of us? It seems there is no issue. There being no issue, let's proceed. Let's proceed. There's just one thing I need to confirm. Payables for 2022, this one here. It is the correct figure. The 7989 payables. Kindly check for me. Yeah, it's the correct figure. 7989. I just wanted to confirm. All right, so let's go to investing. You will take notes if you are not investing activities. So you can make, always for the activities, try to bold them, at least to separate them from these others. So how will you know about investing? Investing, you go to non-current assets. People invest in non-current assets. So go to non-current assets in the question. So the non-current assets we have, I'm seeing here under non-current assets, property, plant, and equipment. Property, plant, and equipment. So property, plant, and equipment is either these people acquired or they disposed. Either they acquired or they disposed. So if it is acquisition, it is cash outflow. If it is a disposal, it is an inflow. Please take note of that. Acquisition, outflow. Outflow you will subtract. And how are you going to know that these people acquired? Increase. You check increase in value. So when you check PPE, in 2020 it was 25, 2021 45, 2022 46. It has been increasing. So just saying, I'm coming there. So these people, this one was acquisition. So you can write for me here, but just I can answer you very fast. Finance cost and dividends, we are allowed in any cash flow to classify them anywhere. Even if you read, I'm sorry to do this, but just to clarify this, I want to show Josephine something. Josephine, just relax the doggo. Maybe, you know, this thing is not only for Castnet, but for our workplace, it is very important. Niliwahi ulizwa in an interview, so I know that I know what I'm talking about. Let me share something. So let me stop this one. Then I share with you something Josephine is asking, which can be of beneficial to all of us. Sasa imeenda wapi? Where I think it's this one here. I just hope. So Josephine, check what I'm sharing. Check at where it should always be. This is the IS7 standard. When you Google from your Google platform, if you Google IS number 7, you will get this. So in the standard, when you check where, check here. Just read from here. Interest and dividends received and paid may be classified as operating, investing, or financing, provided that they are classified consistently from period to period. So those two, dividends and financing, like me, mostly I like putting all of them under financing, but sometimes it's good to change. The examiner in Castnet, nobody will mark you wrong. Whether you classify interest as investing, financing, you know, there are so many arguments. You see, like dividends, you say that I've invested, so I've gotten dividends from investment. Then you put it under investing. Some people say dividends is paid to financials of the company, which is the shareholder, so it should be part of financing. So due to those arguments, they harmonized. Interest, dividends, put them wherever you want. Nobody will mark you wrong. Josephine, are you now satisfied with that? Josephine? Yes. So you can put it anywhere you wish, even at work. Ukiona watu wameshinda wakiweka kwa financing, you can always try to change. So I think for that, it was good for us to learn. So we are back. So investing, we have said they acquired because there is constant increase. That increase means these people acquired the assets. So cash out. So you come here and say cash paid to acquire property, plant, and equipment. Property, plant, and equipments there. So that one requires, though it's easy, it's just this minus this, which can move very fast. But now I'm going to working two. You must tell Casname where you are getting those figures. You don't just bring them from space. So the working, if you have time, which I don't know whether you will get, you can say working sheet 2. Working sheet 2. Then I will always have this one bold. What has happened? I will always have this one being bold. Then now I'm just trying to communicate to the examiner. So I'll go to working 2. I will go to sheet 2, sorry. Then working 2. So working 2, you can call it any name. Whichever name you call your workings does not matter. I will just call it, W should be caps, not a must. So you call it PP. I can just call it PP. So I want to know whether they acquired or no. We already know it was acquisition. So the way you arrange your workings doesn't matter. So I can just say opening. Somebody will say balance brought down. I have no problem with that. Whichever way you arrange it, provided you are linking the other side. So closing. Then we had already seen it was acquisition. I'm trying to write it well. You know, from where I come from in our village, that acquisition, T is always not there. All of them we pronounce S. So I'm trying to write and think if it is in the right order. So I can say 2021 and 2022. So can you check for me the openings? So opening for 2021 PPE. Opening for 2021 is the one which is in 2020. So that is how much. I just want to check whether we are together. Yeah, ED 25,800. Kwani nimeandika wapi kwa space? 25,800. Then closing, they closed with 45,200. 2022, the closing for 2021, which is 45,200. Then now closing 46,700. Then now, the acquisition is the increase. Remember, this is cash outflow. So I want it to be negative. So to be negative, I'll take the opening minus the closing. Sorry, minus the closing there. Then I drag it down. There. I save. Be saving. I think hata huko kwa mtihani mtu atakuwa na save. Ama I don't know, whichever itakuwa una save your chance is 0. So I want to interlink it back. So 2021 is equals to I go to sheet 2, I click there, is equals to, I go back to my sheet 1, I delete up to the equal sign, enter. Then I can't drag because they were in separate, it was not flowing. So is equals to this one here. Also, I press equal sign, I come back, I delete up to equal sign, enter. There it is, and they are the same. I save. So apparently, that is the only investing we have. That is the only investing we have. So I have to bring it here. Top, bottom, single line for the addition. So I will say, so that I don't want to bring manual issues here. So I'll say is equals to this plus 0, so that it remains the same figure. Then I drag it the other side, like that. Then I call it B. I call it B, like that. Then I go to financing. Any question? We are going to financing. Ladies and gentlemen in the room, financing activities. So financing activities, it seems there is no question from anyone. Financing, you go to equity. Listen to that or note it somewhere. Financing is all about equity and long-term loans. Unaenda kwa equity and non-current liabilities. You play with things which are appearing there. You play with the items appearing there. Josephine, does depreciation figure affect investing? No. It can only affect when you are trying to reconcile the PP account. But we say fortunately or unfortunately. Semi-fortunately. The figures which are here, they are giving us, these are net book values. They are the net book values of, actually, I think this PPE, that PPE we need to revisit something. Because the depreciation element was there. Actually, I've not factored for depreciation. Do we include Jesus Christ there? No. There, we need just to, because we opened, no, it's not something serious. Let's just check PPE. PPE, we opened in 2020, we opened with 25,800. Then during that year, that asset depreciated by how much? Depreciation in 2021 was 800. So it means we need to take 25,800 minus 800 depreciation. Then what remains? What remains is what we compare. Yeah, is what we compare with the closing figure. So depreciation we need to adjust. Thank you for that, Josephine. I think it was on our side, not on my side, on our side. So I need to bring depreciation somewhere here. Before acquisition, let me try to, we opened with this, we just bring it somewhere here. Then you can say this, less depreciation, then closing. Now you come to closing. But that is the acquisition. Then acquisition will now be here. So we need to factor for depreciation. Thank you. It will affect actually. So that effect should be somewhere here. So I will delete this. So just bring the depreciation for the 2 years. 2021, depreciation was 800. So I can bring there 800. I bring in 2022, I bring 750 there. Then bring the closing figures for PPE, 45,200. before that, I need to bring it clear. Adjusted. You can call it adjusted, adjusted, opening, whichever name you want to call it. Then I bring here closing. Then it will still be acquisition. For our understanding, it will be very ideal. So what we can do, we say now the adjusted is this minus this one here. So the adjusted is 25, and this other one, the adjusted. So it means the values ought to be the ones which, yes, they should be these values now. But the closing, this one closing went to 45,200. This one closing went to what? 46,700. So acquisition is now the adjusted opening minus the closing, this one here. So the figure will go up like that. So we need to adjust them back here. So cash paid to acquire will be equals to this, this equals to back. I will do away with that. Then this one equals this equals back. I do away with this one. There. So Justin, thank you. It is an adjustment which we needed to capture for PPE. Depreciation, we were supposed to subtract. You take this minus this, then you get the adjusted figure. Then now the adjusted is what you compare with the closing. I hope that is now okay. Then now we go to financing. So financing, I told you, you check equity and long-term liabilities. So equity, let's go to equity. Let's go to equity in the question. So equity, where is equity? Equity huko chini, kuna wenye wamepaka fani. Equity huko chini kabisa, there is paid up capital. Capital, we normally check if these people issued some shares. So if you check keenly, paid up capital, 10,000, 10,000, 10,000. There was no change in capital. So meaning these people never issued shares, neither did they redeem. But most it is issue of shares. So how will you know that these people issued shares? You will know that they issued shares if there was a change, increase or decrease. So you can decide, but now that's a waste of time. There is no need. Maybe you can just write here if you wish to. If you want, you can just tell them that cash paid, cash received, not paid, sorry, received on issue of new shares. So that one will be, if you see an increase. So here you tell them, if any. So if it was there, then you capture, but there was nothing like that. So we are not afraid to show it there. In fact, it will not add anything, neither will it subtract anything. You're just trying to tell examiner that if you could have captured, I would have shown it there. So there is nothing. Then you go to retained earnings under equity. But, ngoja, before tuende kwa retained earnings, hapo kwa capital, if there was an increase, make sure you do that working in sheet 2. Don't just take your calculator and you compute this minus this. No, go and subtract it there. Then you do the normal, the linking. Then you bring it there. I hope that is clear to us. Then retained earnings. Retained earnings will always help us. Will always help us to know whether this company paid dividends. Whether they paid dividends. So how will you know that a company paid dividends? You take the opening profits, you add with the closing, then you take the opening, you add for the year. When you take opening plus for the year, it should automatically give you the closing. If you find the closing is a decrease, then these people paid dividends. Can we do that working in sheet 2? So we call it working 3. So this is working 3. I want to know whether these people paid dividends. So retained earnings. So in cash flow, any cash flow, retained earnings is always utilized to know whether the company paid dividends 2022. So you will bring balance brought down, then you add profit for the year, profit for the year, then at this stage, students will be able to know what the profit ought to be. What is single bottom line? This one here. You'll get what is supposed to be. Then your balancing figure is dividends paid. So dividends paid will be your BF, balancing figure. So dividends is the balancing figure in this case. That is after you compare with the balance carried down. So you compare it with the closing balance, then you are safe. So bottom double underline there. So let's capture those figures. So check retained earnings. 2021 retained earnings opening is the one for 2020, which is negative 78. Negative retained earnings is called accumulated losses. So that is 70/80 negative. For the year, check P&L, net profit, Apple Jew net profit, you are seeing 3640. So you add, so you take this plus this, you get negative. How? $36.40, that is correct. Wait a bit. Yes, but that's it. Then closing now is the profit in 2021. In 2021, the closing profit is 30.53. 30.53. So that increase, it means that actually there is no dividends because actually there was a loss. So 30.53 is the opening. That one becomes the opening in 2022. That should be the opening, 30.53. Then during the year 2022, check P&L huko juu. They made it 10.133. So 10.133, so add the two. 13.186. Then check 2022. I think there is something not being captured properly. There is something not adding up well. Because it's just okay. 15. No, 2022, the profit we have captured is not okay. 2022, the profit is 12,429. 12,429. Check well, 2022. Even 2021, that profit I captured for the year was for 2020. Sour. Check 2021. I captured the wrong profit. 2021, the profit for the year was 10,133. So it came to 30,53. Opening is a negative figure, which I hope you are seeing. Retained earnings, negative 7080. During the year 2021, they made 10,133. So when you take this plus this, it gives you 3053. When you check balance sheet closing, check closing in the balance sheet, retained earnings, it is also 3053. So the profit has tallied, meaning these people never paid dividends. Check 2022. This closing, this one becomes the opening in 2022. Then in the profit account, they made 12. They made 12. So when you sum up, it comes to 15,482. When you check the balance sheet, it is also 15,482. So they have given us 0. There was no dividends in any of those years. So no dividends paid at all. So there's no way we can interlink 0. So you just say dividends paid. Also, we say, if any, there is no dividends in this question. The profits have tallied, so no dividends we are declaring here. That way. Go to non-current liabilities. Non-current liabilities. Go juu. Hapo kwenye mambo ya equity imeanzia. Long-term borrowing. Borrowing, at the beginning, loan was 33. Loan went to 46. Loan went to 60. These people have been acquiring loan. So cash received from loan acquisition. Received from loan acquisition. These people are acquiring loan. That increase, though, you can just do with the calculator. Like sasa wale watoto wadogo wengine, wale wanafanya financial reporting, wale wanafanya say advanced financial reporting. Kwenyu sasa wale watoto wadogo, because now those are very easy things compared with you. With them, they are allowed to use their eyes and use calculator to compute. But now you are serious people in the society, you are not supposed to use calculator. You need to do that working. Show us that, because you know this one, you are presenting it to the management, not management. Actually, what we are doing here is more or less of, you are doing, should I call it management accounting or audit? But this one is mostly done in audit. So this one is going to serious people and even to the public. You need to tell us where you are getting these things. You should not assume that all of us are accountants. We are not accountants. So working for, you can tell us, give it good name. We call it loan what? What name do we want? Do you want us to call it? Loan? Somebody to give us a name, Karar. What if balance brought down plus profit for the year exceeds the closing balance? Dividends 0. If the closing is higher, which in rare cases you will find, ndio maana nimeshtuka vile nimeona imeenda higher, I had to rethink. If it is high, no dividends, but in very rare occasions, very rare. If you add opening plus during, it should tally with the closing. In the unlikely event, it will go down. Somebody to tell me this loan, we just, okay, whatever name you're going to call it, doesn't matter. You can call it any name, loan, you just say loan or anything. What do you want us to call it? We are doing a report na tumengojewa pale na management. Tuandike nini? Because we cannot just come up with a figure. Do we call it loan amortization, loan schedule? Whichever. Let's call it anything. Loan schedule. Scheduling. So loan schedule, we pange aje. Already we have seen they are acquiring more loan. So I can comfortably say opening. Na kila mtu asiandike opening. Wengine wakiandika opening, we andika balance brought down. Wengine wakiandika brought down, we andika brought forward. So that you distinguish yourself with others. Closing, then we saw loan acquisition. loan acquisition. So loan acquisition, the arrangement doesn't matter. You arrange it the way you want. So let's check the loan. 2021, opening is the loan amount in 2020. So loan, where are you? In 2020, it was 33,333. They closed with 46,667. Opening is 46,667. Closing 2022, 60. So acquisition is the increase. And I want it in positive because it is cash in. So I want it in positive form. So I'll start with this minus this. I'll drag that one down there. So those are what I wanted for that. So mine is to interlink them back. So acquisition, I will say, is equals to this is equals to back. I delete up to the equal sign. I enter. And now we're not in the same column. I will have to say here equals to. I go back there. Also equal. I go back. Delete up to equal sign. Enter. There they are. Now you're linking, I don't know how many marks they'll be giving me. Ladies and gentlemen, that is the end of cash flow. There is nothing else. So I don't know whether it was Josephine or I was the two names which were familiar, Josephine and who? There was Josephine and I don't know who was asking that question, and Pauline, but I think it was Josephine. Josephine, come on, capture finance costs up there, bring it here. It will still be marked. There is no problem. Now, bottom, double underline. No, not double underline, sorry. Bottom, top, bottom, like that. Then you add them. So I add by 0. Then I bring it to that end. I will comfortably call it C. Comfortably call it. I'll comfortably call it C, like that. Then now I say here net changes in cash flow. Net changes in cash flow is A plus B plus C, those three. So for each year, you add A plus B plus C. So I'll say is equals to this one. A is there, plus B, usiweke minus because already it's a bracket, plus C. I get 4026 negative. Also that one, plus that one, plus that one there. So those are my nets. Those are my net cash flow. Those are my net cash flow. Then now you bring what is called cash and cash equivalents. Ukitaka kubalance sawa, cash and cash equivalents at the beginning. Sorry, at the beginning. We are finishing there so that we reconcile. Then you get cash and cash equivalents at the end. Then here now bottom, not bottom up, bottom double underline. There. Continue saving your work if that option will be there in exam. Now go to the other sheet, which is now, hey, have I been talking of these workings? No, but the only working which was important is this one here, working 4. This is working 4. Working, anything called workings must be conspicuous. Conspicuous means bold. So my last working, which is working 5, is cash and cash equivalents. So you write here cash, and cash equivalents. So we shall do 2021, 2022. No, that arrangement, wache kwe hivi. 2020, 2021, 2022. We have to do all of them. So there is cash. So check under current assets. Check your current assets, please. Check your current assets. Under current assets, we are seeing cash and cash equivalents. So cash, and cash equivalents. Also in our village, that H is not there. Equivalents. Cash and cash equivalents. Then there was bank overdraft. I saw it somewhere. Bank overdraft. Bank overdraft is also a negative cash equivalent. So cash and cash equivalent in 2020, let's be together. In 2020, because unaweza kosea cash flow, hata tujui kama yetu ita reconcile. Inaweza kosa ku reconcile with some figures, but this one is always marked na inakuwa rahisi. So cash and cash equivalent was 0, which you can be able to see 2020. Bank overdraft 2020 was 5297. Overdraft is negative 5297. There. Like that. Then 2021. 2021, where is the cash equivalent was again 0. And overdraft 9322. 9322. Remember that is a negative figure. Then 2022, cash and cash equivalent was 3823 positive. Then overdraft was 0. Yes, overdraft is 0. So now you get the net position. So net position is this one here, is equals to 0 plus this one here. Drag across. Drag across there. So ukiwa 2021, we are going for reconciliation. This is this one here. In 2020 is the opening for 2021. Then this is the closing 2021. Then this closing 2021 becomes opening for 2022. This is closing 2022. So let's check. So 2020, so you also have to interlink them. You come here, beginning to the neck begging. Beginning is in the beginning, double N or double whatever. So is equals to, you go here, you take beginning, this one, also you say is equals to, we delete, we enter there. So now, honorable members, when you check this, a bullet sum up these two, this plus this, negative 9323. If we are accurate for 2021, it should give you this one. Go to sheet 2. 93, this is 93.22. This one is telling us 93.23. Is there anything we rounded off? There is no rounding off so far. But negative, there is only, it's a difference of 1. Is there anything which was rounded off? I never saw any rounding off. That one will not disturb us. So this one should be the same with the closing here. What I captured around figure 93.22 was out. So, but that's one, maybe something there we can check. So we again take this, we link it here. So when we take that one and we bring it there, it should give us this one. It should give us this figure. When we take this one as the opening for 2022, we take this, we bring it here, then 13, this 13 plus what we bring here, the closing should tally with this one here. So we start. So to link it, that one there, sorry, not that one, this one here is equals to back. I will delete that one up to equal sign. So if you take 13 plus this, it should give you that closing. So this one plus this, 38.23, 38.23, accurate. So it has balanced. That cash flow has balanced. It has balanced very well. Any question? We are done with that one and we have 8 marks. We have 8 marks. In exam, you can move faster. You know, here we are discussing. So maybe you can just do modifications if you have time. Just modifications of bolding. Maybe you increase the font size of those years. Kama kuna time usijisumbue na hizo vitu. So have you understood how we have done the cash flow? Also, I've recorded the class. So if I share, then you go through it again. I think it can be better. Have you understood? I want to hear from Edie says it is fine. I want to hear from each and every one of us. Emma anasema ako sawa. Bilha ako sawa. That is perfect. Now, mtu akona issue. Janet, are you okay? Pauline, Sarah, Steve, Stephen Lumumba. No, Stephen Lumumba was a serious person in this. Lumumba was a Kenyan, really? No, Lumumba was someone serious somewhere. Lumumba, are you fine? Steve? Thank you. Now, for part B, you know now this part B, I don't know what to do with it because it does not fall in financial reporting. It falls, you know, this paper is very fine. It does everything. But we can try out, but I can write here for the examiner. I can write for the examiner here to note that all the examiner whom you are, mwandikia all workings or all the workings, whichever kizungu makes you happy. All workings are munasemanga interlink ama linked. Hebu sema kwenye munasema ni interlink ama linked. Which one? I want to tell the examiner that those things are linked in sheet 2. So you say interlinked or linked. All workings are. Mtu akona kizungu aseme hapo. Steve, yeah, Lumumba. But Lumumba, where Lumumba came from, those people are French speaking, yeah? Are interlinked. Interlinked. See, interlinked in worksheet 2. Worksheet 2. So hiyo 2 unaandika hivyo mpaka unamwekea in brackets 2. So hiyo unamwekea bold. I know what I'm doing. I'm not doing it for fun. You know, I have been a marker of financial reporting, and I know how you can play around with the head of the examiner to believe that you are the perfect person in the country. Ukimwandikia hivyo na umeweka conspicuous, akifungua hiyo page ataona hii note kwanza. All workings are interlinked in worksheet 2. Huyu mtu anasema this is a serious Kenya na amefanya mpaka interlinking. Hiyo linking anaweza kuwekea 5 marks before aanze kumark hizo vitu zingine, because that linking is also a core issue there. Actually, it's the issue. So make sure umeambia examiner you have linked those things, and yajue wewe ni mtu serious when it comes to linking. Now, when it comes to question 22B, here I did not want to do it because me, I'm not very good in finance. So the revenue growth rate. Revenue growth rate. How do you calculate revenue growth rate? Hapo itabidi tumesaidiana. Revenue growth rate, you take revenue, from what I can remember, you take revenue for current year, revenue for current year minus revenue for previous year. Okay, sasa hii biashara hiyo mambo ya kudivide. Sasa hii dividing wacha tuweke madoido. Hiyo dividing, hata hiyo bracket ianzie hapa. Niweke bracket hapa. I put a bracket there. Then I make a slash hapo for dividing. You divide by revenue for previous year times 100%. That is, can somebody confirm from your finance, is that the formula for revenue growth rates? If at all, maybe we'll find maybe research or something. Oh yeah, so people who have checked, wamesema yes. So I'm very much okay. I'm very much okay. So for 2022, they want for 2021 and 2022, like that. So 2021, now utaandika hapa growth rate revenue growth rate, growth rate. Also here revenue growth rates. Working sitakikani hapa kwa presentation. Anything you want to do a working, the other side. So part B of the question. So part B, growth rates. Growth rate, bracket 2021. 2021, I will take, so 2021, I'll take check revenue 2021. It is 64,800, sorry, 64,800 minus 54,000. Hiyo divide naweza iweka hapa. Sema hiyo yote ni underline. You just improvise something which can work for you. Like that. Then your times tunaweza sukuma hii. Your times tuweke hapa. Tuweke 100%. Like that. Tutoe hiyo underlining. So hiyo itakuwa ngapi? I want everything to be formulated. You can formulate 64,800 minus 54. To divide it manually, will it be okay? Times 100. That is useless. That one can't work for us. So I will just have to say okay, so 64,800 minus 54, I get that. Then brackets, utaweka hiyo bracket hiyo siku. This one divide by this times 100, correct? Why is my answer becoming wrong? $648 minus, oh, nimeweka so many zeros. Remove 1 0 there. So that is 64,800 minus 54,000. Then is equals to that. Divide by 54. Yes, times 100. So my answer times 100. That is 20%. So that one is equals to 20%. 20%. 0.2 times. This, it is up 20. 100% times this one times 100. That should be. What is not happening with me, with my figures? Times 100. Yes, 20%. So the growth rate, 20%. If they want to know where I've gotten the answers, revenue growth rate is equals to, yeah, I got it from here. So you just interlink, you come back, I delete, enter. You can do for the other one now. You can do 2022. You can do for 2022. So 2022 growth rate 2022 will be, now profit 2022 is 81. 81 minus 64,800. Ama wacha tu tufanye. Growth rate 2022 will be, now I'll be very keen, 81,000. So it's 81,000. This one is, the other one is 64,800. So here I will have this minus this. Hata akiweka hiyo kasa hapa ataona hiyo formula. Then is equals to this divided by this times 100. 25%. 25% growth rate. You know the best, anything you do here, mtu akiweka hiyo anaona where the figures are coming from. So that is 25%. Usiweke hapo manually. There is no manual here. You are serious citizens. You go back, delete this, enter. 25%. You get 2 marks. Anybody with a question? Can somebody give us the formula for 2 years cumulative average revenue growth rate? I'll appreciate. This was B1. That was B1. Can someone give us B2? What is the formula? I just want the formula. You know this is FM. Me is FM. How do we get the 2-year cumulative average revenue? Someone with a formula? I'm checking what people are writing. Emma, Josephine. So Emma and Josephine, B44 plus D44 divided by 2. Okay. Then Emma, revenue growth rate 2021, revenue growth rate 2021 plus revenue growth rate 2022. Yeah, it's the same thing Josephine is saying. So cumulative, cumulative growth rates, revenue growth rate, that is cumulative revenue growth rate will be, instead of disturbing myself, I need copy. I will copy. Hiyo copy mliambiwa ni control C, ikuja hapa ni control V. That is how we calculate it. So you take revenue growth rate 2021 plus revenue growth rate 2022 divide by 2. So why hizo vitu hazifanywi hapa? You should do it as a working there. Then you interlink. Hiyo ni biashara mbaya. So I will just have to go back here. Then I say it is 20 plus 25. Wait a bit. Bracket, let's use bracket. Is 20 plus 25 close bracket divided by 2. 22.5%. So you bring that one here is equals to, this one equals to, delete, enter, 22.5. This one you have to show which working, at least at ISO. Then, because these are formulas, so here in 2021, you do this bracket. They are in percentage form, remember. All of them are in percentages. So, mtu asikuwe na bad argument against you that these figures are for what. So, all of them are in percentages. You can center all of them. You can have them centered like that. Correct. Part 3, return on capital for each of the 3 years. Discuss your results. So part 3, row C. So do we have rows in this class? So we have row Z. What is the formula for row Z? Row Z should be operating. It should be operating. Actually, in finance, we call it EBIT. Earnings before interest and tax. You divide by working capital, which is the net assets, times everything there. You multiply, let me bracket this. So everything you should, everything here, you should multiply return on capital employed times 100 times, yes, times 100%, times 100%. That is the formula. So earnings before interest and tax. So can I explain there you do, or you want us to work it out? Tell me what you want. I can tell you what to do once you have that formula. Someone, do we proceed, or I just tell you what to do for the remaining? Because my cash flow is over. What I'm doing now is just part of it. Can you kick from there on individual, as individuals, Steve, Sarah, Pauline, Karar, Josephine, Ikra, Edie? Josephine proposes, I can tell you what to do. Even Bill had the same. So I can tell you what to do from here. I know you are sharp people. These are small issues. EBIT, so check the question. Earnings before interest and tax. Hata iko, umepewa. Check P&L. Check P&L. Hiyo umeita profit before interest and tax is the earnings before interest and tax, which you can see there. The net assets, what you do for the net assets, take the total assets, maybe you are indicating somewhere, total assets minus current liabilities. Usiende kwa long-term borrowings. Don't touch non-current liabilities. Take total assets minus the current liabilities. You get that net asset component multiplied by 100 for each year. They want for 3 years. So do for all those years. Then your comment, you will check whether it is increasing or decreasing. So you will just comment that the return on this is not return. Where? Not really. This is not ROSI. Why did I capture? This is return on equity. Sorry for this. Please capture that very fast. This is return on equity, not return on capital employed. Rectify that. This is return on equity. Those are different elements. Those are different elements. So delete C. Sorry for that. So return on equity, even this, those are finance, but fine, I can still recall. You take net income. Net income is now the net profit. So you take net profit, is always the net profit, sorry for this, over shareholders. You divide by shareholders' funds. Shareholders' funds, which is just the total equity. So that is even easy. Take the net profit, divide by the shareholders' funds, which is the equity times 100. Then you comment increase, decrease. Then you get those 2 marks. So that is the formula there. Then maybe where we need to check well is now part C. Using the 2-year cumulative average revenue growth rates calculated in B Roman 2 above. Where is B Roman 2? This one, the 22.5. Prepare a 1-year forecast of the statement of profit or loss for the year 2023. 2023, assume that the vertical ratio for the year 2022, or vertical ratio for 2022, for the 2023 forecasts, except that depreciation and finance cost remains constant. Tax is assumed to be 30%. So no problem there. So what will happen? You will have to copy. Now you copy the 2022 P&L, 22 P&L. You start, check your question. Sales, 81, cost of sales, 32. You copy it first the way it is. Then you do a projection. Your projection, so for example here, you'll say percentage. So percentage at 22.5%. So once you write, so here will be, you write sales. Let me just do one. Sales, so remove the word percentage there. So sales 2022. So this is 2022. Sales 2022 is 81,000. Then percentage forecast, we are using 22.5. 22.5 is 0.225. 0 itakuwa captured, yes. 0.225. Then 2023 forecast. So it will be is equals to this times this. And this one you can just do the presentation. You don't have to link. So this is the forecasted sales for 2023. You will drag all others. So when you bring like COS, that is cost of sales, when you capture this, you will be getting those. But now this is negative, remember, 32,400, like that. So here, 0.225. So 225, we can even drag it down. So you capture. Then when you get to the restricted areas is depreciation and finance cost. Those ones you don't project. Ukikuja kwa projection unaweka 0. When you come to depreciation and finance cost, then you get PBT, then profit after tax, income tax, you multiply. What you have gotten, you multiply by 30%. Then you get it, then the rest you continue with the projection. Just as simple as that. Just as simple as that. So I think we should stop there. Your teacher told me that there is a question in financial accounting which you asked Mwalimu wa tax, and he was requesting if maybe I can assist. Is that the person who asked that question, or it was a unanimous question? You still recall the same question? If you recall, because I'm in that group, you can just text in that group. I will reply accordingly. So allow me to stop at that stage. Remember, mimi si mtu wa IT. So I hope nimejaribu because otherwise nimekuja tufanya hapa kwa ukuta, but I think that one has also helped someone. Mumesaidika, Josephine and the rest, Liz, Bilha, Emma, Sarah, Pauline, Karar, Eliza. I hope at least you have grasped something, so you can keep on checking. I'm sharing that video right now before I go home. When is FM teacher coming through? Because we can see IRR and NPV. To be honest, I'm not aware, but I think it will be coming. Let me ask my root so that you can know. So thank you, class. Let me compress this video, then I share with you in the group. Thank you. Have a good night, and I wish you all the best. Mutapita, there is nothing serious. Mutapita. Thank you. Oh yeah, you can copy Karar, una copy una paste hapo. Like your P&L, instead of writing, you can copy, then una delete those again and compress. That one is okay. So thank you so much.